I asked why. The deadline is over. He is still thinking that I don't need to register for corporate taxes because my turnover threshold is 375,000.
Corporate tax, there is no turnover basis, you have to register. Whether you're a loss-making company, whether you don't have any turnover, nothing. If you are having a license to conduct business in the UAE and you are a company, then you must register for corporate tax.
Only they have to file the VAT return. They were just maintaining the sales and purchase data accurately. Okay, but now expenses, because there are disallowance, allowance, and the major drawback that you will not come to know about the accumulated debt. Now in corporate tax return, okay, you can claim the debt.
I mean, thumb rule is you could say that if probably your number of people is more than the number of fingers that you have, you probably need policy.
Then an audit will be done, and then they will say from retrospective effect, you will have to take the registrations, late registration penalty, late filing penalties, late payment penalties, and everything.
All problems are there. We are specialized in creating the chart of accounts based on the industry, based on the business model. Okay, we customize the solutions for the software as well.
We have seen that companies with good sizable turnover also still following cash basis.
Whenever a UAE national adding to your company, you need to register with the GPSSI within 1 month. If it goes to 31st day, you will get a penalty.
But for the support functions like your HR, finance, procurement, these are the backbone of holding an organization together. For these, it makes sense to have more rigorous policies. But in some areas, you can be a little bit more flexible with the depth that we go.
But when it comes to the tax accounting, they are giving me a choice whether to consider that gain on a realization or an unrealization basis. So if I select on unrealization basis and it's a gain, I have to pay the tax now. You can't change your mind. Next year, I cannot change.
It's an irrevocable
decision.
Welcome to today's HLB podcast session. I'm Jay Krishnan, Senior Partner, HLB HAMT. This session is going to deep dive into the world of accounting and finance, tax, human resource, payroll, and strategic consulting services, including process audit advisory services for an entity operating in United Arab Emirates. We have designed an emerging session today with experts from HLB HAMT, with expert representatives from tax, compliances, finance, accounting, outsourced, payroll, and consulting in general. Currently, if you are running a successful business in UAE, or if you are planning to start an entity, this episode is going to be a must watch for all of you, as we are going to deep dive into various frequently asked questions and experts' opinion on the same, and very interactive discussions which we are going to have, and a handful takeaway at the end. Do not forget to subscribe our YouTube channel. We provide valuable insights on various topics, which is going to benefit the entire business community in United Arab Emirates. Before we go in deep, I would like to introduce our expert panel. Mr. Girish Nair, who is the Director of Tax and Compliance Services of HLB HAMT. He oversees the tax compliance and advisory services across spanning across VAT, corporate tax, and transfer pricing matters. Mr. Raghu is the Director, Internal Audit and Advisory Services of HLB HAMT. He heads the specialized team that provides structure and process advisory as well as outsourced internal audit services to the clients. Ms. Mittal Adhiya, Senior Manager, External Accounts and Finance. She leads the team that provides various accounts and advisory services to the clients from various industries. And Mr. Nazir, a Senior Manager, Outsourced Payroll Services, specialized in GCC countries payroll services, including compliance requirement, heading payroll team who is handling the payroll activities of our clients. This podcast is going to be under 3 major segments. The first segment is going to be myth-breaking section. Second is going to be a Q&A session, which the questions are throwing and then the experts are going to answer the questions. And the last session is going to be an interactive session where, each of us are going to interact each other, and then there will be some experts' opinion on the questions and answers. First, I will start with the myth-breaking session. What is myth? I don't need to explain what is a myth. Myth is generally a misconception or a misunderstanding about any topic. Yeah. So there are many myths, as we all know, because especially in UAE, there are many newly introduced regulations. So basically, obviously, the presence of myths are also going to be numerous. I have seen many myths when I approach a client in my office or in my client's offices. Say, for example, I just wanted to say one example about one myth which I've recently observed, especially with related to the corporate taxes. When I approach a client, when I see a client and asking them, have you done your corporate tax registration? He said, no. I asked why. The deadline is over. He is still thinking that I don't need to register for corporate taxes because my turnover threshold is 375,000. That is the turnover threshold we have applied for VAT. And he still feels that, I don't need to go for registration until and unless my profit is going to be 375,000.
Okay.
So I said, no, that is a misconcept or it's a myth. Then he
They have to
understood.
assume that all taxes are same.
Exactly. So he feels that VAT and corporate tax threshold is going to be same for the registration, but it's a myth. It's not. It's incorrect. So similarly, I can see a lot of myths in the market with respect to taxes, payroll processes, internal audit or accounting or finance matters comes into place. Now we will go into some kind of myth breaking session, which I'm going to ask some questions to the experts panels. They're going to answer. Is it a myth or what is the right step towards that? So I'll start with Mr. Girish Nair. Mr. Girish, since you are a tax expert, and recently the corporate tax is introduced in the country, right? So have you seen, or in your opinion, what is the myth, or can you just name one or two myths by the introduction of corporate tax which you have observed from the public?
First of all, with the introduction of corporate tax, people are having many misunderstandings coming with that, with regards to whether we should register, whether we should file the tax returns, whether we have to pay taxes. So there is another misunderstanding: which kind of persons have to do that? Is it just only the companies, or even the individuals or natural persons who are acting on freelance basis or who are doing business activity under any license? So there should be a clear understanding in the market right now, because it's going to be a huge non-compliance if in case they had to register and make the annual compliance of filing tax returns and pay the taxes on time, because that comes with administrative penalties, interest penalties and everything. So one of the major misunderstanding in the market right now, as Mr. JK rightly highlighted, is that the turnover basis. The turnover thing is still with the VAT. When it comes to corporate tax, there is no turnover basis. You have to register. Whether you are a loss-making company, whether you don't have any turnover, nothing. If you are having a license to conduct business in the UAE and you are a company, then you must register for corporate tax. It doesn't matter.
So does this apply to freelancers, for example?
Now, when it comes to freelancers, we are talking about individuals. For individuals, they have kept a threshold that freelancers are basically who have a freelance license, and then they would be doing a business activity. Now, for that, if the turnover or the revenue from their business activity is less than 1 million, they are exempted from registration. They don't have to do it, irrespective of the profit amount. See, since they're individuals, they are having 1 million revenue, their profit can be even 70-80% margin also, which is more than the threshold of 375,000. But for them, the total revenue exemption is given.
Okay.
But if the revenue goes more than 1 million, combination of all the business activities conducted. See, as an individual, I can conduct a commission activity, I can conduct a consulting activity so under a license. So combination of all the activity, if my revenue goes above 1 million, I have to mandatorily register for corporate tax. I have to file the tax returns and I have to pay the taxes.
And I feel that your question, freelancers are classified as a natural person for the corporate tax purpose.
Okay.
Girish Nair was trying to explain that for a natural person, there is a basic turnover threshold of 1 million to go for a registration. Under 1 million dirhams, you don't need to go for registration. It's completely exempt or out of scope.
And there is some logic for, like, for example, you have Emiratis who own buildings and get rental income.
Yeah.
That's also covered.
Now, when it comes to rental income, those are coming under the category of real estate investment income, which is exempted from corporate tax for individuals. So like
So that's
salaries, we all are working for a company. and if
That's
you're
a
getting
exempted
salaries, that is
activity
absolutely correct.
altogether.
So taxes are not payable on that. Same like investments, real estate investment income are also exempted from taxes.
And adding to that, Mr. Girish, people are talking about grouping, VAT grouping or corporate tax grouping.
Yeah.
So I have seen, there is some misunderstanding among the public about grouping. So is it the same provision for grouping? Grouping provision remains same for the VAT or corporate tax, or is it totally different?
Now, under VAT and corporate tax, the grouping criteria are optional. Even if you satisfy the conditions, it's up to us whether we want to create a group. Now, the conditions in VAT and corporate tax are entirely different. So, for example, if two companies are having if an individual is having a common ownership of 25% or more in two companies, then under VAT the grouping is possible. But the similar thing will not be applicable under corporate tax because there they have gone for a parent subsidiary relationship.
Yes.
A company should be having a threshold of minimum 95% shareholding in another company.
Yes.
Then only the tax group can be formed. So that's
intercompany.
intercompany
Yes,
shareholding. Company to company
intercompany
shareholding has to be there. So that's another kind of misunderstanding where the companies are having. Some people are still believe that if the owners are common and if I take registration for one company, then I can file the returns of all my related companies into that one particular registration, which is a very huge non-compliance when it comes to FT audits and all. So, they will be, for example, if after 2 years they come for an audit, then an audit will be done, and then they will say from retrospective effect, you will have to take the registrations, late registration penalty, late filing penalties, late payment penalties and everything. So it's a kind of huge, administrative burden that's
Right.
that comes in along with if we are not ready or if we have not assessed currently how it is going to be applicable.
So, Girish, you mean to say that even if they are performing or they have created the VAT group, okay, so they can continue with the VAT group even if they are not eligible for creating the tax group, right? So they can continue. Yes, they can continue.
Michael. I think both are different groups, no? For
Yes.
the tax purpose.
Correct.
So they can continue with that.
Correct.
Okay, and even like if they are not eligible for forming the tax group, they have to individually register.
Definitely. Registration is mandatory for all the companies. Then only we can apply for
Standalone
grouping.
basis.
Now, if they are already registered for VAT, it has a separate registration number, separate grouping.
Correct.
Again, as I said, it is optional. Now, in corporate tax, even if I am satisfying the corporate tax conditions, it is up to me whether I have to group or not.
It's
So
voluntary.
there it will be a separate registration number, separate grouping and everything. So it's entirely different.
Yeah, so this myth can lead into big amount of penalty. That is what Mr. Girish Nair is trying to explain. Yeah, because this wrong understanding on because they feel that we have to analyze in a different way also. What if you group it? What if you don't group it? So intercompany transactions and consolidations, these are going to be complex, no?
Definitely. Another misunderstanding is, as I was touch basing it now, I just explain in detail because that is connected to your accounting part also. As I said, companies still believe that if they are coming under one corporate tax group, one corporate group, then they are, they don't have to maintain separate books of accounts. They have to just combine in one, financials, and then they have to file just one tax returns. So maybe you are also facing the challenges when it comes to this kind of scenarios.
Yeah. So that
Excellent,
that is the myth. That is a myth prevailing in the market. Correct.
Excellent observation, Mr. Girish. So now, having said, these are linked to the maintenance of books of accounts. Corporate tax anyway connected to the maintenance of books of accounts. So I just wanted to ask you a question, or rather a myth to Ms. Mittal. Is it mandatory to maintain books of accounts in UAE? Even though the regulation says that yes, you have to maintain, but there is a myth in the market or in the society that books of accounts maintenance is not mandatory in the country. Is that correct or not?
No. So that's a big myth prevailing in the market that maintaining the accounting records or financial records is not mandatory in UAE. Okay, because of the past practices, because there were no stringent rules in the UAE. Okay, and because of there was no clarity on maintaining the books of accounts. So that's a complete myth and a misconception which can lead to a high penalties, high non-compliance. Okay, and as Mr. Girish said that when you are not maintaining the books of accounts, okay, when you will go for the audit or tax filing, okay, your books of accounts should be separate on a standalone basis. Okay, but there is a myth that when you are forming a corporate group or when you are into the same group, you have to maintain common books of accounts. But that is not the case. As per the corporate tax, you have to register differently, okay, and then you have to file the standalone financial statements to the audit for the audit purpose, even for the tax return preparation purpose.
So what you are trying to say is, books of without books of accounts, it is going to be very difficult to go with the tax compliance.
Yes. So see, there is a legal requirement. Okay, as per the business commercial law, federal decree law, there is a mandatory requirement. You have to maintain your books of accounts for at least 5 years. Okay, that is on a standalone basis also. Okay, so see, as per the IFRS, if you have to consolidate your books of accounts, that's a different thing. Okay, but still there is a requirement to maintain the books of accounts.
I think the issue is about the quality, how well they are maintaining.
Yes.
Yes.
See, yesterday only I had a meeting with a client. Okay, they have 2 subsidiaries, okay, branches, one altogether a separate entity, and they are maintaining the books of accounts in the same software. I don't know now. Now, when they came to know that they have to file the different tax returns, okay, now they want to separate the books of accounts. So now the challenge will be to migrate the data from one accounting system to different accounting system, because they have common debtors, common creditors, intercompany loans, intercompany transactions. So now they have to, everything they have to break down. They have to segregate.
Yeah, maybe, the companies, earlier, VAT came into effect only in 2018.
2007-8 time, yes.
Yeah.
So they followed a different approach till that time. So companies are still following the same practice, even after implementing corporate.
Yeah,
tax.
because earlier only they have to file the VAT return. They were just maintaining the sales and purchase data accurately. Okay, but now expenses, because there are disallowance, allowance, and the major drawback that you will not come to know about the accumulated debt. Now in corporate tax returns, okay, you can claim the debt. Like, you have accumulated losses. You can carry forward those losses. Yeah, for the infinite period. Okay, so that will be a challenge, because you will not be able to carry forward and claim the benefit out of it. Yeah. Okay, so that is the myth. So that is completely a myth prevailing in the market. So we would suggest our clients that please maintain your books of accounts on time for audit requirements, for legal requirements. Even if there is no legal requirement prevailing, I guess they are completely ignoring the financial insights which the books of accounts will provide to the owners, business leaders.
And they also need it for bank facilities, right?
Yeah.
Banks without proper accounts, no bank is going to be comfortable lending,
because many companies, they have to file their financials to the regulatory authority, okay, to the investors for some agreement, for some commitments to the investors. Okay, so that fulfillment will not be there. And because of there would be many challenges going forward. So we always suggest our clients to be compliant from the base itself. Okay, then they will not, because if your trial balance, we have seen many cases where trial balance is not matching. So that is the base. Because if trial balance is not there, nobody will even touch your books for the audit and tax. So that is a myth, and there should be a proper control over this myth breaking which is prevailing in the market.
Yeah, it's a good observation, Mithil. So basically what you said is, to say that books of accounts maintenance is mandatory, even if it's not mandatory as per the lower regulations, we have to maintain books of account for various other reasons. Yeah. Including bank facilities, profitability assessment, etc., which is going to be mostly, mandatory requirement for everyone. There is no doubt about it.
Because otherwise the business leaders will never come to know about the profitability, what is the situation, investment opportunities prevailing in the market. So they will miss out on this opportunities.
Yeah. And taking the points away, books of accounts are leading to various provisioning in the books of accounts. Yeah.
Yeah.
I just wanted to ask or discuss rather with Mr. Nazir. He's a payroll, expert in payroll and compliance related issues. We have seen, or we all know that in UAE, we have seen a mix of employment. Yeah, UAE nationals, or particularly GCC nationals, or non-GCC nationals, or we technically call it as an expatriates. So when you book the gratuity provisioning in the books of accounts, so is it different for both? GCC nationals follow different gratuity process, or is it totally different terminology? Yeah. Or expatriate follow different practices?
So basically, it is a common understanding that all the UAE nationals are eligible for social security, and all the expats, they are coming under end of service gratuity. But there is one exception for this particular thing. So if any GCC national working in UAE, they are eligible for social contribution, which is relevant in their countries. Okay. So in order to make the things more clear, I just want to give an example. So for example, if one Bahraini national, nowadays many GCC nationals are working in UAE. So if a Bahraini national who is working in any of the UAE entity, they need to go with the Bahrain social security. But what GPSSA is doing, GPSSA acting as a facilitator, they are facilitating to register this employee with the GPSSA first. Then GPSSA sending a communication to the respective country's social security.
GPSSA is a UAE body, right?
Yeah.
It's a UAE body.
GPSSA is a UAE body. So in Bahrain, the social security is handled by SIO, which is Social Insurance Organization. So once, the initial registration is happening with the GPSSA, then GPSSA is sending a communication to SIO organization, which is in Bahrain.
Okay. So it's a regulatory body, one regulatory body to another regulatory
Another
body.
regulatory body. Then SOA is giving a confirmation back. This employee registration is completed.
Okay.
So after that, the invoice, payment, everything is belong to SIO only. SOU is, nowadays, everything is through online portal. So when you are registering with SIO, they are giving access to their online portal. So where you can able to get a username and password. So you just need to log in that. You can see you will get a monthly invoice from SIO. You need to make the payment.
Okay.
So, the general rule, all the expats are belongs to end of service gratuity. There is an exception that mainly relating to the GCC national. They are eligible for the social contribution, which is relevant to that particular country. And also there is one more exception that is mainly, there is a special economic zone which is called a DIFC. Okay. So DIFC, they just moved that end of service gratuity. And now, they are following a dues plan. So in dues,
DEWS, right?
DEWS. In dues, what is happening, normally the end of service gratuity company is only booking a provision. And they are making this payment only at the end of their service period.
Right.
But in dues, company need to make this payment on a monthly basis to an investment account. Okay. So when the employee is leaving the company, the particular authority, they are investing this to somewhere. And when the employee is leaving the company, they are paying back this amount back to employee, including, the return which, they are associated with this particular income.
So it leads to a kind of security to the employers and employee in case anything downturn comes or something. Yeah.
Okay.
So is it a different name or a same name? Like gratuity, you call it as a social security contribution or social contribution. But end of the day, these are same, in logically these are same or different?
Well, social security, since they are expat, normally, once they completed the job, they may go back to their home country. Okay. So pension scheme, once you are reaching a certain age, you will get a monthly income from that particular scheme. But for this dues and all, once you completed your employment, you will get a bulk amount. There is no monthly amount, you will get a bulk amount.
They also get the returns from that investment.
That is only at the end of their service period. Yes, they will get. Okay. So what the authority is saying, when you are contributing that amount, they can invest this. And you can select whether
But
you
is the
want
risk
to.
of investment going down
Yes.
on the employee?
Risk is already there. Risk is
No,
there.
no. Is it on the employee?
Employee only.
Oh, really? Okay.
Okay, risk is there. Okay.
But it's market
But
driven.
employee has the option to select the plan.
Very
There are
good.
multiple
Okay,
plan,
okay.
basic, but
okay.
those who are very risk-taking person, they can take that also.
Yeah.
So that option belongs to employee. They can select. The ideal thing is, once the money is transferred, that money belongs to employee. Employer, whatever the reason, they are not going to refund or they are not going to get back that amount. Once the money is transferred, this belongs to employee.
Yeah, but there is a disadvantage in provisioning because their investment opportunities will not be there.
Yes.
And
So it's better.
I have seen Nazir is talking about some in depth on complex topic. It's not going to be a very easy topic,
Yes.
and we thought it's quite easy, but when Nazir is putting forward, it looks it's a complicated topic, and there is no doubt or there is
Because
no
we
reason that it
we
should not
only
be
know
with-
gratuity.
Yeah,
We have never heard of this is the next two and this.
The thing is, earlier in our, payroll, there won't be much UAE national.
Yeah, but
And
now
the possibility of GCC national comparatively less. Now, because of this changes, many UAE national coming into private sector.
Democratization.
And government is also putting some initiative to make, mix in the employment, to include all the multinationals in payroll. So this will add some complexity in the payroll processing and all.
that's why the outsourcing is always best idea, right? To the
Yeah.
experts.
Yes.
Especially where there are mix of different nationalities,
Yeah,
especially GCC
exactly.
nationals and local residents.
This topic will remain as a myth. It looks, because
Yeah, because still, because we don't know about this GCC national. We only know gratuity. We have to create the provision in the books. Done.
yeah. And nice answer, Mr. Nazir. And now I just wanted to, ask Mr. Raghu. And Raghu is an expert on policy, procedures, documentations, etc. Which I just wanted to ask you a question that, or people have a misunderstanding that policy procedures are mandatory for a larger organizations only, or a SME kind of company should follow a policy procedure documentation system.
So actually what we see is reality is that most larger organizations have policies in place. Now, there are a few things on that. The policy is also the relevance, the age of the policy. If I have a policy which was written 10 years back and things have changed, it may not be relevant. Now, just now, Nazir talked about, dues and, these are all recent legislations. Corporate taxes come in now. There are so many related changes which you need to apply in terms of compliance area. Other than that, within the organization, so many changes would have happened. So, larger organizations have policies. They may or may not update it, but they have policies. At least that's in place. Now, people think that smaller organizations, everything is, I know everything, so I don't need policies. So, thumb rule is you could say that if probably your number of people is more than the number of fingers that you have, you probably need policies. So, you could probably simply say that because there needs to be standard. At some point, the organization has to know, right, how to do things. So, otherwise, the knowledge is limited to a few people. If one person, for example, if that XYZ person leaves, the knowledge goes with him. His replacement will come in and then things will be completely confusing for the people who remain in the system. So people tend to have it, it's a bit of a, it is actually a myth that small organizations should not have. And secondly, sometimes there is a certain scale. So we wouldn't say that, if it's a 2-3% company have policies and, that probably is not relevant. But once you grow beyond a certain stage, or even if you aspire to grow, say, for example, policy is the biggest thing. Why we tell small organizations to have policies is it helps them when they want to grow. If every organization wants to grow, like the smaller one also wants to become large, by and large. There are some people who are fine, who are staying at certain level, but majority of organizations wants to grow. At that point, policies become important. So that's why though, small organizations may not have it, at some stage, it's always good to
no matter the size of the
yeah. Because I have heard, like yesterday only I had a meeting with our client, and they said we have exponentially, had a growth which we have never expected. Yeah. So you never know, when you started with a very small scale, but when you have a good client base.
No, that's a good point. So, because there are opportunities. Now, see, if you have a policy, it helps you to leverage on that.
Yes.
Otherwise, everybody is running behind the opportunity, and things are growing on the top line, but below the line there is still chaos because people are following a certain system of operating.
Yeah, and
so that's where it helps.
Just to add, Mr. Raghu, see, we are talking about policies and procedures. Once the corporate tax is introduced, many company, we recommend the companies to follow a tax procedures manual, tax procedure manual rather. Yes. So that is also, so what I wanted to ask you is the policy procedures are meant for certain, operational activity, or is it the organization as a whole?
See, it impacts the entire organization. Like for example, tax. Now, it cannot be in isolation. The finance manual should ensure that it is dovetailing with what the tax says. Similarly, there are, especially when VAT was there, you would have input credit. So the procurement has to act in the right manner. So these should all gel in together. And I'm not an expert on tax, you would know better, but other functions also, for example, sales might need to consider. I'm not sure, there would be other functions which might need to consider tax. Definitely the CEO might need to know, because if they are going to make large investments, what are the tax repercussions of those? So those things also would come in. So at that point, I think, up the line also, it is good to have that awareness. Even it comes to delegation of authorities also, which is, probably the major governance manual below which all the policies come in. Yeah. So at that point also, who takes decisions on large investments? So will they have knowledge? What will the tax impact of these? So for example, if a big investment is reviewed, maybe it makes sense for this to be reviewed by the tax person also. Yeah. So at the DOA stage itself, we can talk about these things. We need not even, so it's a sort of thing which is quite closely interlinked. So that's why it's important.
With the introduction of corporate tax, we have also seen that people are now asking for tax manuals to be, implemented, to be drafted and to be, kept. And they want to include the VAT aspect also, because as you said, since the beginning, now almost 7 years are going to get over with the introduction of VAT in 2018. So they just want to now streamline everything. They don't want any kind of misunderstandings, or they don't want any kind of, a new non-compliance is being identified. So they want to streamline everything, get an assessment done, update your tax manuals, create a tax manual if it is not there. If it is there, then update that.
And one important point, what we recommend to our clients is don't stick to policies for only one division. It should
Across.
be across.
It should
because-
be across the
Yeah,
organization.
these are all
Correct,
linked.
correct,
So
correct.
that is otherwise, in
Yes,
silos if you
yes,
operate,
yes.
it may not benefit finally.
Yeah.
And also, when you are looking for an investor,
Yes.
okay, if you have a written policy, it's very easy to convince them.
Correct.
Yes, that we have
So like
policies
the
in place.
opportunities we
Yes.
talked about, one opportunity could be that direction also, not
Yes.
organic growth. It could be a third party
Yeah.
investing.
Yes.
So they see that policies are coming. Exactly.
Another myth I have seen, especially in the tax segment. See, we are all talking about transfer pricing, technical topic of transfer pricing. Yeah, benchmarking, transfer pricing, market value assessment, arm's length assessment, etc. Which when you talk to a client, there is a general myth in UAE that transfer pricing is not meant for everyone. This is meant for certain class of companies, say 200 million plus turnover company or a large organization or a pillar 2 level companies. So is it a myth that transfer pricing is not mandatory for everyone?
See, transfer pricing, again, we have to look into two aspects. Now, transfer pricing is a blessing that came with the corporate tax, but entities are not comfortable to some extent considering the age-old practices, decade-old practice that they have been carrying out since long. And along with that, the cost also, because transfer pricing, as I said, there are two aspects to that. One is arm's length compliance. The second is the documentation part. Now, both is fundamental to one process called transfer pricing benchmarking. Benchmarking is a very costly affair. We have to use a third-party database, and we use prominent databases. We use quality databases, but there are other databases also available in the market. But we try to ensure that at least the benchmarking that we do, we have accurate data. Now, companies still, they are reluctant to still accept that transfer pricing is applicable to them. I would say that's a practical thing that comes in when new laws kick in. New laws are introduced. They have certain difference of opinion with what we say, with the government is introduced. There is but the FTA has made it very clear with the introduction of transfer pricing rules, the specific articles with regards to documentation, with regards to guides, they are specified. Now, threshold is kept for companies who have to maintain certain transfer pricing documents. So there's a threshold for that. But when it comes to benchmarking as in treating a transaction with your related party at arm's length, there is no exception. Even if you are even if you're doing a 10 dirham or 100 dirham transaction with your related party, it has to be made sure that it is at arm's length.
Yes.
So how we can make sure at arm's length is by doing a benchmarking, which comes with a cost. So now again, when a transfer pricing benchmarking is to be done, we have to first correctly assess what our related parties are, what type of transactions are there, and all the transactions may not require benchmarking. So this kind of still reluctance to accepted but not ready to go ahead with that.
Even I would say that they are not even aware, because
Absolutely correct.
they are blindly doing the related party transactions,
Correct,
intercompany loans, sales purchase. So we face as a accounting department, okay, when we look at the transactions, when we analyze the transactions, there we come to know that these are completely related party transactions,
Correct.
where they don't know that, like, they are simply because they're the owners. Okay,
Correct.
they feel that transferring from money here to here, it's very simple because it's their money, right? But they are not looking from the tax perspective or the legal compliance perspective.
Tax impacts are not being properly studied and assessed. And
So-
same thing again to Mr. Girish Nair, just see, generally there's a talk in the market now about salaries, remuneration to the owners of the company or to the connected people. So when an owner or a shareholder of a company who's working in an organization is drawing salary, that's a quite common practice in the country. And then is there a process to be followed for benchmarking such salary for the owners?
Payment to the shareholders, the directors, the key decision makers. Basically, we bring it to the category of KMP benchmarking, as rightly pointed out by Mithal. It's key management person benchmarking. So it needs to be made sure that since they are the decision makers, so they can decide on the payouts and everything, and accordingly the tax liabilities can be adjusted. The first thing what you have to note is there is no individual tax or personal income tax in UAE. That's why if an individual draws higher amount of salary, they will be claiming higher deductions and not paying salary on the other part also. So to limit that currently and to keep the to have an industry standard, they have said any kind of payouts, and that can be in the form of salary, remuneration, commission, bonuses, any kind of benefits also, like my children's education allowance, vehicle, housing, my vacation benefits. So all that, when it comes in, all that has to be considered as a cost to that one particular person, the shareholder or the director or the key management person of the company. So a benchmarking has to be done for that also.
Yes.
We were expecting that some sort of mechanism will be introduced that, to simplify
Some threshold will be
the
there.
benchmarking to be set up. But now, till now, nothing has come up. But they have made it very evident that market rate has to be followed. Now, to do the market rate, we have to select one of the transfer pricing methods which needs to be implemented when calculating the benchmarking for the total cost of the salaries paid out to the persons under that category. So again, when it comes to transfer pricing, we have to look at related parties, which we are talking about the companies. Company to company is related party. Company to individuals are connected persons.
Okay.
That's what
Yes.
we're saying.
We have one client, like they have created an internal policy. Okay, so that person who is a director, of course, so he internally formed the policy, okay, for the house rent allowance. Okay, and he himself is living in Burj Khalifa.
Yeah.
Okay, so the rent is like 200,000. Okay, so yeah, so you mean to say that for that also we have to check the benchmarking, right?
Definitely, along
Because
with
it
the
will
housing.
be, yes, so it will come under that.
Thumb rule would be if you were to hire a similar person with same skills, how much would you
Yeah,
pay?
Correct.
Yeah, yeah,
correct.
that-
That would be
that's
the
what.
yes.
thumb rule, right?
That is
And
already
with the industry, with the scenario or the environmental of the similar industry,
Right.
that is also plus
Yeah,
factor.
and his involvement in the business. Yeah, means
So that's what Girish is trying to say. Some methods are there. So if you just name one of the method,
one of the prominent method used in transfer benchmarking for the connected person payments is the TNM method. That the full
Transactional
form
net
is
margin method.
transactional net margin method. What we follow. Now it is, as pointed out, it is not just that as a shareholder I can take any amount. Yeah, and if I'm not involving completely, because there are records to be maintained to prove that okay, the shareholder is also actively involved in the operations or the decision making of the company. Shareholders, the primary source of revenue for a shareholder is always dividend. Now, if I'm getting involved in the company as a shareholder, then I am eligible to take salaries also because I'm spending my time there.
Yeah.
So that kind of benchmarking needs to be set up, and that again comes to the internal audit or the organizational structuring part, wherein a policy has to be
That's what
kept
I'm
up.
saying. From an internal audit perspective,
yeah.
we need to see whether these things are
and
being
that involves
run in the right way.
the TP policy, TP procedures, etc.
Everything.
Exactly.
Everything. So with the introduction of guides, laws and everything, and the tax return templates are also out. For July, June companies,
Yes,
they have
yes,
started to file the
already
tax
done.
returns.
Yes.
So the templates are already out. With that, they have made it very clear that transfer pricing documentation they are going to focus on, because with the return we have to attach the certain documents also. So it is very evident now.
Yeah, so there is no doubt that this still remains as a myth, because there was no proper clarity from the authority side on this transfer pricing. But slowly we are getting some valuable information from the authority. And yes, a good observation, Mr. Girish. Now, again, Ms. Mittal, I just wanted to ask you. See, it's a continuation of our earlier discussion that books of accounts maintenance. Yeah, you were mentioning that books of accounts maintenance is mandatory, though legally yes or no, that is not matter. No matter what size of the company. Now, people still show reluctance. Yeah, they don't want to maintain it in some cases.
Yeah.
So, having said, there is a reluctance, or there is a general tendency of not maintaining books of accounts for some of the entities or some classes of entities.
Yes.
Is it going to significantly impact the operations or the accounting side of the entity?
Yes, certainly. So see, in continuation of the earlier discussion, where it is mandatory, still companies believe that it's not mandatory. Okay, even though there are legal requirements, there are some repercussions which is going to have a long-term impact. Okay, so why do they believe that? Because they think that it is not directly contributing to generating the revenue. Okay, because maintaining books of accounts is not directly
that's true.
but the potential impact which it have, because right now we are discussing about the transfer pricing, right? Now for that you need to have a documents.
Correct.
Okay, you need to have proper financial records. Okay, so here the business leaders are completely overlooking the financial insights, the penalty parts, the legal compliance part, everything they are overlooking. They are just thinking that they have to just record what is money in, money out, done. But it is not that, because as per the UAE federal decree law, you say, or after the corporate tax has been introduced in UAE, okay, you have to follow rigorous books of accounts maintenance, because IFRS compliance is there.
Yes.
Right? I guess there is some limit also, right, for IFRS, like turnover
50 million
limitations. Like
turnover, yeah,
yes.
50 million
So full IFRS and IFRS for SMEs. Okay, even though your turnover is like less than 50 million, you can go for the IFRS SME, but still it is mandatory to follow the IFRS. Okay, till now people still are not aware about what is IFRS. So these are the international financial reporting standards which needs to be followed to maintain the financial records, to submit the financial statements. Okay, and to when you are going to submit, there are some free zones where you have to submit your financial statements on a regular basis, on a yearly basis, to renew your license. So if your records are not proper, you will stuck with the red license renewal this thing and all, and it has a longer impact, because you will not see what is your profit, cost control, how to reduce the cost, what are the investment opportunities in the market. This all can be overlooked if your records are not proper.
So it's touching various departments of the entity.
Various
in
departments.
total.
Okay, because you will not come to know that what is your departmental revenue. Suppose now multinational companies, they have various entities, various departments. Okay, so some of the departments are going very well. Okay, and some of the departments are going. So where to stop? Okay, if you don't have the records, how will you take the decisions? So to make the informed decisions, your financial records should be aligned, okay, with the authorities, with the local laws and regulations, and this needs to be done now immediately. Because the corporate tax is already there in place.
Yes, understood.
Yes, and still we are getting some inquiries like we don't have the books. We're just maintaining in the Excel sheets. Okay, so how to drill down the ledgers, chart of accounts. These all problems are there, and we are specialized in creating the chart of accounts based on the industry, based on the business model. Okay, we customize the solutions for the software as well. Okay, so this is going to be a very helpful to all our clients. Okay, because we can advise them according to their industry.
So one more thing what I want to add is, in the corporate tax law itself, they have stated there can be two bases of accounting, cash basis and accrual basis of accounting.
Yes.
We have seen that companies with good sizable turnover also still following cash basis of accounting. But in corporate tax, an exemption is given where the revenue is less than 3 million, we can opt for the cash basis of accounting. But if it is 3.01 million,
you have to go
it
for
has to be
accrual
accrual
basis
basis of accounting.
Yes.
But we have seen companies with turnover in 8 figures still following cash basis of accounting, so that's a huge risk when it comes to
real estate sector.
real estate sectors and all. Still they're following that.
And they don't know what is the concept of accrual and the deferment. Okay,
Correct.
Once you issue the invoice, you are just recognizing your revenue in the books, where the effect of economic benefits you are going to get in the future period. So rather than deferring those revenues, okay, it has like in 1 month you will have a huge revenue. Okay, but when you compare the data, comparatively in the next month, you will have a zero revenue, which is not a true practice. Okay, so we people are the experts in, guiding in those basic accounting principles. Okay, where people are not aware of all these things.
And true. See, basically, Mitra is trying to talk about the fundamentals, to be followed to ensure that there is no major legal or non-legal compliances in the industry. Mr. Raghu, I just wanted to ask you quickly, maybe you can quickly summarize this question because it's going to be easy for you. Procedures, policy, manual, we discussed about that.
Yes.
But is it going to be lazy for the company, or is it going to be bureaucratic for a company if they maintain that?
See, there is, it depends on the size of the company. We don't say that, everybody should have a 100-page manual. Okay. If the manual or the amount of policies that you have, the depth of the policy should be the right size. It should be tailor-made for the organization. That is what we do. We do not say that, a company, a government entity can have a huge manual, because that's the scope of operations, the level of audit they are subject to. There would be, for example, in Dubai, you have the Financial Accountability Authority. They review these things. So you need to have a proper policy in place, which is the first step towards having controls. So that's very critical. But smaller organizations, say, for example, if it's a creative organization, I mean, you have, for instance, it could be a designers or architect firm where there is a large number of people who are creative. Now, you cannot, go too stringent on those functions. But for the support functions like your HR, finance, procurement, these are the backbone of holding an organization together. For these, it makes sense to have more rigorous policies. But in some areas, you can be a little bit more flexible with the depth that we go. So it's having the right depth of the policy and the process which matters. So we don't want to, suffocate organizations with, in-depth policies, but at the same time, it has to be something, it has to be a good trade-off between operations and controls. So that is the bottom line. So
Understand.
that's how we always
it's a
recommend.
mindset. Yeah, people should understand.
Exactly.
Okay,
So-
understand. Now I'll go to Mr. Nazir with a complicated topic, which we feel that this is going to be addressed. We were discussing about social contribution and then gratuity, etc. And in UAE, there are various emirates. So is it different from each emirate to emirate? The law for this social contributions are different, or there are some exceptions followed by certain emirates?
So basically, there are two authorities who is handling the social security or pension in UAE. So one is Abu Dhabi Pension Fund. So all the companies which is registered in Abu Dhabi and all the UAE nationals, they need to be registered under Abu Dhabi Pension Fund. Okay. All other
Abu Dhabi Pension Fund.
Abu Dhabi Pension Fund. All other companies, which is coming in, all other private companies which comes in other emirates like Dubai, Sharjah, Quwain, Ajman, everybody, they need to register with the GPSSA, which is very familiar to all. Okay. Now, even in GPSSA itself, there are multiple category actually. Earlier, everybody comes under same law, which is, law number, there is a law in 1999, federal law 1999. That is the one followed by all the entities. But, in 2023, a new law came into picture, which is, law number 57 of 2023. Once it is implemented, there is a two category. Okay. So those who joined prior to October 2023, they need to follow the old one. That is, Federal Law 1999.
October of 2023.
Okay. To make it more easy, we'll go with an example here also. Now, in our company, okay, so we are going to take two UAE national. Okay. One is already in the job market. He worked with some other company for 10 years. And now, they are coming to our company. Now, second scenario, there is a fresh graduate, just finished qualification, now joined to our company. The first candidate, he is already in the job market. He is already worked with another company. So, for him, the law applicable is 1999.
Old law.
1999.
Okay. The new law, law number 57, it is applicable to those who is joined after October 2023. Now the difference is, in the first case, employee contribution is 5% irrespective of their salary. And company contribution is 12.5%. And government is also contributing 2.5%. That is relating to the old stuff. Now, the fresh graduate who is new to job market, for them, the percentage is different. Employee contribution is here is 11%. And company contribution, there is a slight change. Here also there is a subcategory. So those employees whose salary is less than 20,000, for them, employee contribution is 11 and company contribution is 12.5%. But
So it increased from 5% to 11% for new law.
And also, if the salary...
Emirate level difference also, right?
No, that is
That
not.
is not.
That is
It is-
it.
That is across the UAE.
Across the year.
Okay.
Now, if it is a salaries goes above 20,000, then employee contribution still remains the 11%, but company contribution will move to 15%. There is no government contribution. Okay, this is the change actually. So, if a UAE national is joining to your company, you need to identify whether he is coming under old law or new law. If it is new law, what is the salary bracket? So, based on that, you need to make the contribution. And also, there is a maximum cap also. If the salary goes more than 50,000, you need to keep a limit of 50,000 for the social contribution as per old law.
Okay.
In new law, that is moved from 50,000 to 70,000. Okay. But this all relating to GPSSA. Now, if you go back to the
Abu Dhabi
Pension Fund, the rate is almost similar. But, in Abu Dhabi, in old law, it is employee contribution is 5, company contribution is 15. There is no government contribution.
Okay.
In new law, the employee contribution is changed from 5 to 11.
11, okay.
And the company contribution still remain the same 15. So there is no change in company contribution in Abu Dhabi.
Okay, but here
Only one category. There is no such. There is no government contribution. So company contribution remains same. That is 15%.
Okay.
This is only in Abu Dhabi.
Abu Dhabi. And one other interesting case, if a company which is registered in Dubai, okay, it's a parent company. Now they have a branch in Abu Dhabi. They are still applicable to GPSS, not Abu Dhabi pension fund.
Okay, so branch case only head
Head
office.
office is the thing.
This contribution is on basic or gross
It's against the total salary.
total salary.
Yeah. And also the maximum limit also there is some minor difference. In Abu Dhabi pension fund, in old law, the maximum base is 150,000. Okay, it's little
150,000
150,000
dirhams.
Okay. So, there are so many, frequently changes is coming. And also in GPSS, there is a very recent change that is in October 2000, just last month. Okay, there is the entire payment mechanism they changed. Earlier, companies, whenever they are making contribution, they are putting full details in employee name, what is the salary, how much is the employee contribution, how much is the employee contribution. So, all the input, we are inputting into the system and making the payment. But now, authority completely changed that particular process. What they are doing, based on the record available in the GPSSA record, they are issuing an invoice against the company. So company want to make a payment against that particular invoice.
Okay.
It's easy. Okay, process-wise, is it easy now? Even if you have 25 employees in your company, you just want to make one payment.
So is there any risk of penalties for any non-compliance happens here? Mistakenly, because if the HR is not, expert or something like that. So is there any risk of penalties in this case?
For sure, in UAE, the compliance is very much important.
Right.
And there is a deadline for everything. Okay. So for October, you need to make the payment before 15th of November. The 15th of the next month is the deadline for making this particular payment.
Okay.
If there is a one-day delay, you will get the penalty. And also, whenever a UAE national adding to your company, you need to register with the GPSSA within 1 month.
Oh.
If it goes to 31st day, you will get a penalty.
Is it?
Okay. So, whenever there is a deadline, if you didn't follow that particular thing, automatically that will add it to the UAE invoice. It's by system. By default, this will be added. You don't have any other option.
So Nazir always talks about complicated topics. So the best way I feel that there should be a new terminology of calling it as a payroll audit. Also something similar to that.
Yeah, because even when we look at from our perspective as an internal auditor, having this kind of knowledge will help our clients, to sensitize them to these issues. Because for example, now this is just only one part. I think another complication is, say for example, if a Bahraini national comes here and works in UAE, then what is the angle? And if he goes, and there is also turnover.
Yes.
Like people come and leave.
Yes.
And plus the base of companies, because of emiratization requirements and the period-wise targets, the number of companies which have to start onboarding Emiratis is going up.
Yes, percentage.
So
There
it's
are some
not like
different
earlier it used to be the big companies' problem.
Only big
the smaller organizations were relatively, peaceful
Relaxed
about
and
it.
peaceful
but
about
now I think everybody has to be more sensitive to it. So yes.
Thanks, Nazir. Mr. Girish, I just wanted to ask you a question. I heard the terminology of elections in the corporate tax law. So what is this terminology? What are the election options for the client?
Now, in corporate tax, there are certain areas where we can elect what we want to choose to report. So it depends on our analysis whether we should go with that choice or not. So first we would be analyzing, whether it is beneficial for us, beneficial for the entity, for the client, whether which option to choose and what is beneficial. But the thing that we have to note is certain elections are irrevocable.
No.
So we cannot change it every year. Or we cannot change it case to case basis. No, there is no time gap. There is no exception given.
So even after 5 years or there is no deadline?
No.
Given. So it's...
In rarest of the rare scenarios, depending on the situation, why you are changing the election again, FTA may approve that based on an application. But it's not simply given over like a candy. You will have to explain, you will have to put your facts. So elections are there in the area of, so for example, when we are following the IFRS, we would be accounting for the, let's say we did a revaluation of a property.
Okay.
We would be accounting it on, as per IFRS, we would be accounting it on unrealized basis. I have just done my revaluation and it's still in my books. I have not disposed of.
Accrual basis.
But when it comes to the tax accounting, they are giving me a choice whether to consider that gain on a realization or an unrealization basis. So if I select on unrealization basis and it's a gain, I have to pay the tax now.
You can't change your mind after.
I cannot change. Next year I cannot change.
It's an irrevocable.
It's an irrevocable election.
decision.
But if I select on realization basis and if I am realizing means by way of disposing or transfer or anything, then and if I'm doing it even after 20 years, then I have to pay the tax only at that time. So it's a cost because see, this year is a gain. Next year it can be a loss. So today I am opting realization basis, but next year I am having a loss. I cannot take it on realization basis. So no, unrealization basis I cannot take it. Yeah, because I've opted for that.
You need to analyze.
Yeah, that
Entity to
analysis,
entity.
correct. It should not be just 1 year
What is
analysis.
beneficial to
it has
them?
to be long-term analysis has to be done. And again, with respect to small business relief is also there. The companies with a turnover of less than 3 million can opt for small business relief.
Yeah.
That is, they don't have to pay any tax. Still, they will have to register, they will have to file for the tax returns, but they don't have to pay any tax. Now, again, this relief has certain restrictions.
Okay.
I mean, if you are in you are in certain category of companies, you cannot claim the small business relief and all. Then comes the free zone election. Free zones have a choice. For example, if as a free zone and I myself as an entity, I'm satisfying all the conditions to get the 0% tax rate. Everyone is looking for 0% tax benefit, right? But free zones are given the option whether you want to go with the 0% benefit or you are opting for the normal tax rate of 9%. Now, one would think, why I will go with the 9% tax benefit? The reason is if a free zone is a loss-making company, it can be grouped only if I am selecting the 9% tax rate. If I'm opting for the 0%, then I'm a qualified free zone person, and then I will not be, able to group with a local company or an LLC company in UAE.
Or mainland company.
Mainland company.
Who are having in a 9% bracket.
Correct. So the adjustment cannot take place. And with regards to, there's a business restructuring relief. There's a qualifying group transfers, option given to us, whether we can do that. So there are certain elections, there are certain reliefs also indirectly given by the tax authorities so that they don't want to burden. And they have kept very well in mind the dynamics of the company operations in UAE when they have given such reliefs. Because every company will not be satisfying the 95% category condition for tax grouping. So they have given a transfer of tax loss also, where two companies are having a common ownership 75%. One company can transfer the loss to other company.
Oh.
So that's a benefit. So they have done very important studies also when they are drafting the law. So it's one of the benefit also given. So these are all part of the elections and the reliefs that we have.
So what I have seen from Grish's observation was, since this is a irrevocable terminology, see, democratic elections, we can correct in 5 years at least. 4 years, 5 years. This is not. But corporate tax elections are non-correctable, irrevocable. That's what it looks. So it's very complicated, and we should be very vigilant to choose the yes or no questions from the election option. Otherwise, we will be leading to either a negative or it can go into other way of tax implications. Thanks, Girish. And now, Mr. Raghu, I just wanted to ask you a question that, imagine a company who follow a proper, well-documented ERP system. Is that sufficient, or still in that case, you still recommend to follow procedures, policies, manual separately?
It actually depends, but what we would suggest is to have a balance of both. See, you might have the best ERP, but then like we saw, the frequency of changes of the laws, there are so many things which are happening outside the system. Everything, the ultimate, operationally, it can be automated using ERP, the process, when it comes to the process level. Now, policy and process are two different things. Policy is the law, saying what you should do. Process is how you do. So process is where the ERP comes in. So that is where the end of the stage of the process at the implementation stage, we see that the most ideal process is an automated one. Where the ERP takes care, there is no scope for manual error, there is no scope for manual judgment, yes. So, for instance, simple, if you look at any basic thing like an attendance process, if you have everything integrated with your biometric, with your face or thumbprint or whatever, everything is there. Olden days, maybe not even that old, even in 10 years back, I know organizations where people used to sign. And, come in and then you would have HR sitting and tabulating and all of that. So automation is the easiest way. There is everything is hassle-free, especially the repeated tasks can be done correctly.
Right.
So you have ERP which has its role, but at the same time, if you completely rely on ERP, there are two things. One is an organization, when you invest in an ERP, it doesn't always have 100% fit. Because there is always a cost-benefit decision when you are going to buy an ERP. You will say normally there is a process of evaluating the ERP.
Yeah.
So we have our own technology consulting team. So we work with them very closely on some of these projects. So there is always, you need to decide to what extent I am willing to trade off that automated control.
Yeah.
Because the more you go automated, there is a cost. There is a customization cost. There are a lot of these costs.
Yes.
And there are uncertainties.
Yeah.
So while ERP processes are definitely the end game for implementation, it's always good to have the manual policy which is there, because that's something which can be changed. Every day you can't call your vendor and customize. Like Nazir was saying that, for example, the payroll, there are so many changes which are happening. You cannot keep changing it all the time.
Yes.
You will do it, but through a certain policy. There has to be a policy change. Accompanying that should be the process. So that's why we always recommend for most organizations, especially the larger ones, to have both.
Okay.
Otherwise, leaving everything to the ERP is always a little bit, incomplete.
Yeah.
So that's our recommendation.
Yeah. Nazir, since you are a payroll-related expert, in the GCC region, so I heard a terminology of Mudad. Yeah. And I believe it's about Saudi Arabia, right?
Yes, Saudi.
So what is the topic about?
So basically, in Saudi Arabia, now, there are many companies opening their business because of some, there are so many companies, they are opening their regional headquarters in Saudi Arabia. So, Mudad is a digital system which is introduced by Saudi Ministry of Labor to ensure the labor compliance and, employee grievance. And they are also giving an option to process their WPS salary through this system itself.
So it's a platform.
It's a digital platform actually. Okay. So, we'll give you in UAE, we are everybody familiar with the WPS. Okay. So the same WPS is available in Saudi Arabia also. But in UAE, when you process the salary through your bank account, the information is automatically from your bank, it automatically passing to the central bank. Right. From central bank, the information is digitally moving to the Ministry of Human Resources or other government authorities. So everything is happening automatically. But in Saudi, there is a slight difference. When you process your salary through WPS in your bank, okay, you will get an output file from the bank itself. Once you got that output file, you need to upload this output file to Mudad portal. Okay. So Mudad portal, there has all the records of employee, what is their salary and all. Once you upload it, the Mudad portal itself will inform you whether your company is compliant. Okay. And if there is anything, they will put a violation. Like if you have 10 employee, you paid only 9 employee. They will ask a question, why this employee is not paid? Then you need to put a clarification. This employee is on unpaid leave, whatever it is. Otherwise, compliance issue will be there.
But this practice is prevailing only in Saudi Arabia, right?
This is only in Saudi Arabia.
So how does it impact a UAE company?
UAE company, there is no impact on that one.
If you are having that is because you are doing payroll services for Saudi Arabia, this becomes critical.
Yeah.
So a UAE company which employs a Saudi national is not subject to
it's
this.
not.
Okay.
This is only for the company which is registered in Saudi Arabia. So that is one of the main compliance requirements in Saudi Arabia. If you didn't upload file to this particular portal, that also will be an issue. So if you didn't upload for 2-3 months, you have some ban which is you can't apply for the new visa and all.
No.
Okay. So basically it is a compliance system which is introduced by the government to ensure that, all the staffs are getting their payment, which is agreed as per the employment
agreement. As per the employment terms. Excellent, Nasir. Excellent. An important question to Mithil. Mithil, since you are doing the finance accounts, external accounts and finance function for various companies, so what step you normally take in HLB HAMT, our organization, to ensure that, proper value addition has been shown towards the client? So any specific or few examples which you can explain?
Yes. So now, when people are in a zone of thinking that it's just a repetitive task or it's not productive, as we discussed, it's not mandatory. Okay. So it's not like that. See, we are following many service models. So accounting is just not doing the data entry. Okay. It's about the reconciliation. Okay. So there are so many reconciliation, like cash bank reconciliation, AP reconciliation, accounts payable, accounts receivable reconciliation. Then you have to streamline your chart of accounts.
Yeah.
Okay. We are doing the projects where we are providing the accounting review services. Okay. So if the companies have in-house accountants, okay, so what we are offering, we are just providing our eyesight on the procedures and laws, okay, whether they are following IFRS or not, okay, and we give our recommendations, okay, observations and recommendations, okay, even we are passing with the technology, okay, so we have incorporated robotic process automation, okay, into our all the accounting processes.
It's in the accounting, for the accounting purpose.
For accounting,
bookkeeping purpose.
for bookkeeping purpose, not only bookkeeping, not only data entry, even for accounts payable processing. Okay, so we have automated the processes where you will receive the vendor management. Okay.
Fast track as well.
Yes, fast track as well. Even it reduces the time, it reduces the cost. Okay, so you don't need to sit back and process each and every payment, because we have multinational clients. Okay, where they have to pay like multi currencies, invoices. Okay, many large volume of data we have to process. So instead of going each and every, okay, we have automated those processes. Okay, so we don't need to sit and process the payment. It automatically happens. So we have run the bots. We have developed the bots with our IT consulting team. Okay, so see, it's not like people or humans. Okay, bots runs 24/7. Okay, so so we don't need to just sit on the system and check. Okay, so because of that, even AP processing plus AR processing. Okay, so sending the reminders to the clients. Okay, so we don't need to send reminders. Okay.
Manual reminders.
Yes, no manual reminders. Okay, we have to just set the credit period allowed, and it will automatically send the reminders. Okay, so we have automated all the processes. We are using the cloud-based platforms where there is a reduction in cost, time, efficiency has increased tremendously. Okay, so that we can focus, because we are giving personal attention to each and every client. Because every client is very important to us, and where we have to study, review their books, we have to give them the proper advisory, okay, which IFRS, because right now people don't know, still people feel that IFRS 16, nothing. We have to pay rent, immediately do the prepaid entry, done and dusted. No, but they don't know. They are still asking us, like, why to show ROU assets and ROU liability in the balance sheet? Why can't we claim and reduce the profits in this? Okay, so we are still facing those problems. IFRS 9, even revenue recognition, which is the simplest but very important. Okay, they don't know. So these are the advisory which we provide to our clients. Even accountant secondment. So we place our employees to the client's places for the limited period if they want expert advice. Okay, so then we deploy our employees there, okay, and sort the things out, sort the books out. So these are the service models we follow.
You're talking about the intervention of artificial intelligence in the accounting, data entry, payroll management, etc.
Everything. Yeah. So it has brought the efficiency. Almost 40 to 50% time reductions we have achieved. 100% elimination of the duplication of entries. Okay, and 100% elimination of the redundancy and the data entry part.
Okay.
Everything is automated.
And this benefit goes to your clients, right?
Yes, because there is a cost reduction in errors. Human intervention is not there. Okay, so we are not supposed to, like any USD currency, we are not going to put in AED. Yeah, there is a possibility, right? So this has been, and the cost benefit, because when we are saving our time, we can give more value, pass on the clients. Okay, so ultimately they are getting the benefits.
Yeah, nice to know HLB HAMT is into the value addition process, always value addition,
They're always pacing with the technology.
And that is the two based on technology, it's a great idea. Now, we will go to the third session, the interactive, Q&A sessions, which, anyone can ask question to the other panelist. So, Raghu, you start asking a question to other co-panelist, and the other person is going to answer that question.
Yeah, so actually, the questions that, we think of is, I'm actually looking at the compliance perspective. Now, for instance, if you look at, we talked so much about tax. Okay, there's a lot of time we covered on tax. What happens, what are the implications if somebody doesn't pay? Or what are the penalties? What are the legal requirements? Or, what happens? What is the penalty structure like? And how do we tell a client that, okay, you do XYZ things, you will be clean? So how does that work? How do you actually go about convincing a client or helping a client to make sure that he is compliant?
See, when we carry out an assessment or when we conduct an initial analysis of, and implement tax compliant framework strategy for an entity or an organization, our main objective is to make sure that they are compliant with the current laws and the non-compliances are reduced to bare minimum. Now, the reason I'm saying we don't drop it down to zero non-compliances, that area is not there. Somewhere gaps are going to be there. So we try to make sure that all the major areas of non-compliances are identified, and the penalty, of course, is reduced to the bare minimum level. Definitely yes. So now the penalty structure is governed by the tax procedures law. Now it has a fixed penalty also, percentage-based penalty also. It depends on what kind of non-compliance it is. If it is something related to registrations, late registrations, deregistrations, or late filing of tax returns, it is a fixed penalty. Amount differs. I'm not going into the amount specific.
Yes.
That's a it's a document where we can get in. Then let's say I have misreported something, knowingly, unknowingly, whatever it is, that's the second thing. But if we have misreported something to the tax authority in the tax returns, and I have to correct it, then in that case, there is a fixed penalty also, there's a percentage-based penalty also. Now, when the FTA, here also, they are giving us a, way to correct the returns from our side by way of self-assessment. So there the penalties are there, but it is less.
Okay.
But now if FTA comes for an audit, and then they find out the non-compliance, then along with this fixed penalty and percentage-based penalty, they will be having a percentage-based penalty, which is going to be the major chunk. That's why we always encourage the clients. Correct. That's why we always encourage the clients to every 1 year or at least every 2 years to do a self-assessment in-house by their team. Of course, everyone is knowledgeable enough to understand that, but if they don't have the time, they don't have the resources to get an expert consultants, tax consultants like us, who we provide that, to do an assessment to make sure that in the 2 years, whatever changes have happened, they have accepted it, they have implemented. Or else, at least if they have not done it, then do the corrective course of action plan at the earliest, so that they can correct that with the lowest penalty possible penalties. Because if FT identifies, then again, it's a non-compliance. Then again, once the penalty is levied, the client will say, no, we don't accept it and all, then they have to go for the reconsideration.
The same thing we say in internal audit. You cannot eliminate risk, but you can minimize risk. So it's the same thing. You can
then again to
bring
contest
it to
that
as close as possible.
Contest that penalty is also a very lengthy process. So all that can be avoided.
Correct.
So timely self-assessment and taking the, making the corrective course of action of correctly reporting to the tax authorities by way of self-assessment is the best way, what we always suggest. Before that, if you are at the beginning stage itself, if you are implementing everything correctly, then that's the best thing to do.
Yeah, but that comes with in the continuously evolving business environment. When business owners and business leaders are continuously, they are thinking how to focus on the core activities, how to achieve the efficiency, how to reduce the cost. Okay, so they are always stuck when you talk about the policies and procedures. Okay, they are always stuck with the decision making, whether to automate the processes, whether to offshore or whether to outsource. Okay, so Raghu sir, in that environment, how do you guide your clients, to make the decision in this line?
See, again, every client's individual circumstances. See, when you have certain things, automation, of course, it is there to stay. Now, you cannot go manual anymore. Right. As far as you do a process, yes, like I said earlier, you will have something which is manual, which means it's outside the system, but you try to automate to the extent possible, and you try to bring into ERP, RPA, or whatever is the best possible option. We go to the extent possible. Again, there is a cost benefit. But then we have things like outsourcing. Outsourcing is something like, for example, we could outsource payroll function, because there are so many changes which are happening today. Now, how do you make sure that you're in control of that? You could outsource it to a specialist. You could outsource part of the tax. You could outsource internal audit. These are all areas which you can outsource. So that option is always there. Another thing is there is offshoring. Offshoring is the option where you go outside your UAE jurisdiction. You go to a country like India, for example, or Philippines, or maybe Egypt, or where the relative cost structure is lower, your labor cost is lower in all of these countries.
But it also comes with the challenges.
Exactly. So you need to monitor. You need to first identify who your partner is, outsource partner is, who's going to actually run the show there, what are the risks involved. So those are all. That's why my earlier point of which I was telling Girish is that if you, for example, outsource your tax function, how do you ensure that you're penalty free? I mean, because if somebody sitting in another country is making a mistake, how do you, that risk
cope
is there.
With that,
Plus, some industries have there are governance, like UAE Central Bank doesn't allow you to transfer customer data outside. So you cannot outsource everything. You could probably do your corporate level things. But an individual customer, suppose you're a bank which has got a lot of customers, that customer's any data of that customer should not go outside the shores of UAE.
Yeah.
That's a law. So you cannot, I mean, if you do something like that, you are at penalty risks there. So it's again a very case-to-case thing, but yes, options have to be selected very carefully as to what makes most
Nice
sense.
interactive debate. Yeah, nice interactive debate. We are almost winding up the session, and before we wind up, I want the panelists, to share some thoughts from their side individually. A few takeaways, which our listeners can take away, and then they can go back to their office and try to implement in their office. So I'll start with Nazir. Any valuable suggestions from your end?
So basically, nowadays everything is changing very faster manner. Even, earlier the laws are not changing that frequently. But nowadays, even in UAE, any similar country, in GCC countries, in 2022, entire labor law changed in UAE. So they come up with a completely new labor law. Earlier, there is some article may change. Now in 2022, entire labor law changed. As part of this, there are many new things came. The probation rule changed, so many new leaves added. So that change is happening. Now emeritation came into picture. GPSS, there are many changes is happening. Not only in UAE, if you check the Saudi Arabia, okay, they introduced this Mudat, they implemented Kiva portal. So there are so many things happening in Saudi Arabia. In Bahrain also, the SIO contribution, the percentage is changing on a yearly method. This year it is 15, next year it is 16. So that change is happening. When you go to Qatar and all, earlier the pension contribution is not applicable to Qatari national working in private sector. They started that one. Oman also, the authority name itself they changed. Earlier it is, they changed it from PASI to Social Protection Fund. So what I want to say is,
Social Protection
Fund. Okay. So what I want to say is, now everything is changing. And the compliance, especially in GCC market, compliance is very important. If you have some compliance issue, that will have a big impact on your financials. You may need to pay heavy fines. So make sure, your company is completely complied with the procedures, rules. So make sure, you are updated with all the laws, changes, which is happening in this sector. So make sure you are updated with the law. You followed all the compliance procedures. Make sure all the deadlines are followed. Okay. Otherwise, this will make a big impact on your operations.
And thank you, Nazir. Girish, any message?
So continuing to what Mr. Nasir said, compliance, tax and compliance go hand in hand. And he added major portion of that. Tax is not going to go anywhere. Tax authorities are not going to go anywhere. We cannot stop them from coming to us. The only thing we can do is embrace the compliances laws and be prepared.
Correct ourselves.
So corrective action plan is, making sure that you are compliant, accept it, that this all is going to be a part of our organization for unforeseeable future, and be prepared.
Yes.
So they may come, they may not come, we cannot do anything, because after all, it's all about FTA comes for an audit and what they will identify. So the thing is, be prepared.
Yes.
All the time, continuously, 24/7. That's it.
Good takeaway.
And the corrective steps starts from maintaining your books of accounts. so first step to avoid the risk of penalties, non-compliance. Okay, it starts with the books of accounts. Okay, correct. Just if you are not if you don't have experts, please hire someone or outsource your accounts. Okay, then so that you can avoid these penalties. Okay, you are always audit ready.
Correct. Definitely, that's what.
Because
audit readiness.
Audit readiness is very important.
Correct.
Okay, so you should always be audit ready, tax compliance ready. Okay, so you should not come up with any surprising non-compliance penalties or something like that. So that is the only message, that please break that myth that accounts or financial records maintenance is not mandatory in UAE. It's very well mandatory. It is very well required, and it's very well beneficial. It's not like it's not worthwhile. It is very worthwhile, productive. Please try to understand and be compliant.
Thanks, Mittal. Now, as always, Raghu is going to share some, unique kind of, takeaways.
What I was trying to say is, what we do as when we do business processes is the step before all of this. See, unless you know the laws, how do you follow them? So that is where we say policy. So you have to have a tax policy, you need to have a payroll policy, or processes, both. And similarly for accounting. Accounting, of course, though it is software driven, but there are certain policies which people need to have. So when we always tell our people that you ensure that your policies are there, drafted by the people with the right skill sets, Okay. And in our team, for example, we have internal auditors who review the policies once done before it actually goes to the implementation. And in policies also, one thing that we always tell our clients is there has to be support from the top. For policies to be, actually effective, there has to be support from the CXO level.
The owners
or the
level.
owner level.
Owners level.
So that is very crucial. So that is something that we say. And so finally, I was telling JK sometime back that, we have the whole of all of these things. We need to consider this as an integrated unit. I mean, like, for example, to draw an analogy to medicine. So you have something called general medicine. It used to be called general, but it is actually becoming very, very niche. To have general medicine practitioners, so you can have, the cardiologist, nephrologist, neurologist, or whatever ologist. But at the end of the day, it is one human body. Okay. So the general medicine practitioner ensures that one human body is treated as the same. So here also it is the same, that we have that one corporate entity or one legal entity, one business, who's the client. So this client has to be benefited from an array of services which is required. So that's the reason why I think the way all these services integrate and gel well together. That's very crucial. That understanding is crucial. Yeah.
So that HLB is a body and we are all the part of that which serves to our clients. Okay, to be compliant in every way from each department. Yeah.
So nice conclusion by Mr. Raghu. Thank you for joining us today. Especially, I would like to thank you all the panelists, Mr. Raghu, Ms. Mithil, Girish Nair, and Nazir. We hope it's a wonderful session, and we try to carry the technical topic with some kind of fun or jovial topics. So we will be coming up with more competitive topics in future. And by the time, stay tuned with our YouTube channel. Thank you so much.